Welcome back to Smart Income Masters, where we help you make money smarter.
That's right.
Hit that subscribe button if you're ready to level up your financial game.
Absolutely.
So today we're diving into something that I've always been curious about.
Yeah. Huh?
The best way to invest $100.
Interesting.
Yeah. So a while back, I actually decided to put this to the test.
Oh, really?
Yeah. 4 years ago, I invested $100 in 5 different ways, and I tracked the results.
Wow. So you've got like a real world case study here.
Exactly.
Fascinating.
And we're going to break down, each method, talk about how easy it is to learn,
Okay.
how much passive income it could generate, how tax efficient it is, and of course the risk involved.
Gotcha.
And the big reveal is we're going to see how much each of those $100 investments is worth today.
I think our listeners are going to be surprised by some of the outcomes.
I think so too. So let's start with individual stocks.
Okay.
Now, full disclosure, learning the ropes with individual stocks,
Yeah.
it was a pretty steep climb.
I can imagine.
You really need to understand company financials and market trends, all that jazz.
So you were looking at income statements, balance sheets, cash flow statements.
Oh yeah, all that stuff.
Wow, that's commitment.
It was a lot.
Yeah.
But, while there's potential for good passive income with dividends, those regular payments to shareholders,
Right.
the risk is high stock. Stock prices can swing wildly.
Yeah.
And let's be real, you could lose everything.
You could, and that's what makes your experiment so interesting.
Yeah.
You didn't pick stocks based on careful research.
Nope.
You threw a dart at a list of companies.
I did.
Just pure chance.
Pure chance, yep.
Okay.
And that dart landed on Samsung.
Okay.
After 4 years, that $100 is worth, drumroll please,
Let's hear it.
$67.72.
Oof. A negative 32.3% return.
Yeah.
That really highlights the unpredictable nature of individual stocks.
It really does. But here's where it gets wild.
Okay.
If that dart had landed on Apple,
Okay.
we'd be looking at $170.
Wow.
Microsoft, $188. But then there's Invideo, which would have actually lost a bit, landing at $98.
Interesting.
Yeah, it just shows that even with companies that do well overall,
Yeah.
timing and luck are huge factors with individual stocks.
Absolutely.
All right, next up, real estate investment trusts, or REITs.
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 Okay.
Now, REITs are a great way to get into real estate without actually buying property.
Yeah, you're essentially owning a piece of a bunch of different properties,
Right.
things that generate rental income, like office buildings, shopping centers, apartments.
Exactly.
So you diversified your holdings without the hassle of actually managing a property.
Exactly. So
Yeah.
learning about REITs, moderate effort,
Okay.
easier than buying a building, but you still need to know how REITs work and the types of properties they hold.
So you did some research before jumping in.
Oh yeah, I did my homework.
Okay.
And I invested in a REIT focused on commercial real estate.
Commercial real estate, right?
And that choice had a big impact.
Yeah.
After 4 years, my initial $100 is worth $98.59.
A small loss of 1.41%.
It's likely due to the pandemic's effect on commercial real estate.
You got it. But remember those dividends we talked about?
Oh yes, the regular payout,
REITs are required to pay out 90% of their profits as dividends.
right?
And I earned $1.93 over those 4 years.
So including those dividends, your total return is actually 10.52%.
Exactly.
Not bad at all, especially considering the circumstances.
Not bad at all. It shows how external factors, like a global pandemic,
Right.
can really shake things up in specific real estate sectors.
Absolutely.
Now let's jump into the world of cryptocurrency.
Ah, cryptocurrency. It's been quite the roller coaster the past few years.
To say the least.
Put it mildly.
Now for crypto, the learning curve is, I'd say, moderate.
Yeah.
You need to understand wallets, exchanges, and
Oh.
basic concepts like tokenomics.
Right. And of course, you have to be comfortable with volatility.
Yes.
Crypto prices can swing dramatically.
Yeah.
Big wins, big losses. It's all part of the game.
It is. I decided to keep it simple for this experiment and put that $100 into Bitcoin.
Okay, the OG cryptocurrency. The OG cryptocurrency.
All right, let's see how that played out.
And the results are well remarkable.
Okay.
That $100 is now worth $652.12.
Wow, a 552% return?
It's mind-blowing.
That is incredible.
It is, but let's be real. Bitcoin's performance is not typical of the whole crypto market.
No, it's not. Many cryptocurrencies haven't fared nearly as well. Some have even vanished completely.
Yeah, that's true.
Bitcoin has definitely been the star performer over the past decade, but that incredible potential comes with high risk.
Absolutely. All right, let's shift gears to something a bit more traditional.
Okay.
Gold.
Gold. All right.
It's been a store of value for ages, and a lot of people see it as a safe haven when the economy gets shaky.
Yeah, gold is interesting because it's not about generating income, it's about preserving what you already have,
Right.
especially when inflation is high.
Exactly. Learning about gold investing,
Mhm.
pretty straightforward. You can buy physical gold like bars or coins or invest in gold ETFs.
Those are exchange-traded funds that track the price of gold.
Exactly.
Okay, so which route did you go?
I opted for a gold ETF.
All right.
And after 4 years, that $100 is now worth $140.11 over, a respectable 40.1% return.
Not bad at all. While it's not as dramatic as Bitcoin's performance,
Yeah,
it shows how gold can act as a wealth protector, holding its value even when other things are fluctuating.
exactly. Gold might not have the rapid growth potential of stocks or crypto,
Right.
but it provides stability. And for some investors, that peace of mind is priceless.
Absolutely.
Yeah.
Okay, so we've covered individual stocks, REITs, cryptocurrency, gold. What's left?
Finally, let's talk about index funds.
Index funds.
Now, index funds are a great way to invest in the overall market without having to handpick individual stocks.
You're essentially buying a basket of stocks that mirrors a specific market index like the S&P 500,
Exactly.
which represents 500 of the largest publicly traded companies in the U.S.
Exactly.
It's a passive approach. You're betting on the overall performance of the market, not trying to outsmart it.
Exactly. And the learning curve is low.
Okay.
You don't need to be a stock expert to get started.
So no need to pore over those financial statements.
Not at all. I put $100 into an S&P 500 index fund, and after 4 years, that $100 is now worth
$179.53.
a 79.53% return.
Pretty impressive for a hands-off approach.
It really is. It goes to show the power of long-term diversified investing.
It does. The S&P 500 has historically delivered average annual returns of 8 to 10%, which makes it a reliable option for building wealth over time. And while index funds might not offer the explosive growth potential of something like Bitcoin, they provide a level of stability that many investors, especially those just starting out, find incredibly valuable.
For sure.
So we've seen a lot of different results here.
Yeah.
It's fascinating to see how these various investments played out over 4 years.
Yeah, it's been quite the journey.
It has.
From the wild ride of crypto to the steady gains of gold
And everything in between.
and everything in between. It just goes to show that there's no one-size-fits-all answer when it comes to investing.
Right. Your ideal investment strategy depends on a bunch of factors.
Exactly.
Like your financial goals,
Yeah.
your risk tolerance, how much time and effort you're willing to put in.
Exactly. So we've covered a lot of ground in this first part of our deep dive into investing $100, but we're just getting started.
There's so much more to explore. And in the next part, we're going to delve deeper into some key takeaways from your experiment.
Yes, we are. We'll discuss what surprised you, what you learned, and what advice you have for listeners who are inspired to start their own $100 investment challenge.
I think they're going to find this really insightful. So stay tuned for part 2, where we unpack even more valuable lessons from this fascinating experiment.
You definitely don't want to miss it.
Absolutely.
And if you haven't already, hit that subscribe button to make sure you don't miss any future episodes of Smart Income Masters.
That's right. Keep making money smarter.
We'll be right back. All right, so now I know what you're thinking.
What's that?
I wish I had bought Bitcoin 4 years ago.
Ah, yes. The classic hindsight is 20/20 dilemma.
Exactly.
Yeah.
If we could predict the future, we'd all be sipping cocktails on our private islands. But the real takeaway here
Yeah.
is to understand your options. Figure out how much risk you're comfortable with.
Right.
And build a portfolio that matches your financial goals.
I think that's a really important point.
Yeah, and throughout this deep dive,
Mm-hmm.
we've seen how important diversification is.
Absolutely.
Imagine spreading that initial $100 across all 5 investments.
Oh, that's an interesting thought.
You had captured some of Bitcoin's incredible growth,
Yeah.
but you had also benefited from gold's stability and those steady returns from the S&P 500.
So you would have smoothed out the ride a bit.
Exactly. That's the beauty of diversification.
Yeah.
It smooths out the ups and downs,
Mhm.
helping you manage risk over time.
Makes a lot of sense. So what are some of the most important things our listeners should consider
Yeah.
when they're choosing investments?
Okay, well, first, honesty is key.
Okay.
Be honest about how much time and effort you're willing to put in.
That's a good point.
You know, if researching individual stocks or diving into the complexities of cryptocurrency
Yeah.
isn't your thing,
Right.
totally fine.
Hmm.
There's no shame in opting for something less demanding like index funds or REITs.
I think a lot of people feel pressured to be like stock picking gurus, but it's really not for everyone.
Not at all.
And it's not necessary to be successful.
Right. Find something that fits your personality and lifestyle.
Exactly.
And you got to be real about your risk tolerance.
Oh, that's huge.
Can you stomach the possibility of losing a big chunk of your investment, chasing those high returns?
Mm-hmm.
Or do you prefer a more conservative approach?
Yeah. Are you going to be losing sleep at night
Right?
if your investments take a dip?
Exactly. And knowing how different investments have performed in the past can really help here.
Yeah, looking back at historical data can give you a sense of
Yeah,
how things have weathered different economic storms.
exactly.
So you can kind of get an idea of the risk and return profile.
Exactly. And it's also important to remember that your investment strategy should evolve as your life does.
That's a good point.
As you get closer to retirement, you might become more risk averse.
Right. You don't want to be taking on too much risk when you're close to needing that money.
Exactly.
Right.
Or as you build wealth and gain experience, you might feel more comfortable taking on a little more risks.
So it's not a static thing. It's a journey.
It's a journey, a lifelong learning process.
Absolutely.
The more you know, the better decisions you'll make aligning your choices with your financial goals.
Couldn't agree more. And you mentioned tax efficiency earlier.
Oh, yeah.
Which is something that a lot of people overlook.
Oh, yeah.
It's not just about how much you earn, but how much you actually keep after the tax man takes his cut.
Absolutely. Tax-advantaged accounts like Roth IRAs
Yeah.
can really shield your investment profits from taxes,
A huge difference.
making a huge difference in your long-term returns.
And don't forget to research the tax implications of different investment types.
Yeah, that's important.
For example, cryptocurrencies are currently taxed in many countries, while certain gold investments might have more favorable tax treatment.
So do your homework.
Yeah.
Consider the tax implications
Right.
before you commit to any investment.
It's all part of making money smarter.
Absolutely.
Yeah.
Remember, a dollar saved in taxes is a dollar you can reinvest and grow.
Exactly. Now, we've covered a lot today.
Yep.
Individual stocks, REITs, cryptocurrency, gold, and index funds.
Yep, the whole gamut.
But after seeing the results of your 4-year experiment, what do you think is the best way to invest $100?
That's the thing.
What?
There isn't one right answer.
Yeah, I figured you might say that.
It boils down to your personal circumstances, your
Yeah.
goals, your preferences. What works for one person might not work for another.
It's about finding that sweet spot.
Exactly. You've shown that each investment method has its own set of advantages and disadvantages.
Absolutely.
Some are better suited for those seeking aggressive growth, while others prioritize stability and preserving wealth.
And that's why diversification and tailoring your investments to your individual needs and risk tolerance is so important.
Exactly. And what's clear from your experiment
Yeah.
is that even a small amount of money consistently invested over time can grow significantly.
The power of compounding is incredible.
It really is.
Yeah.
And while there are no guarantees in the world of investing,
Right.
starting early and sticking to a disciplined approach
Yeah,
can dramatically improve your chances of financial success.
absolutely. Now, here's a final thought for our listeners.
Okay?
Imagine you invested that $100 4 years ago
Okay.
and then added another $100 every month.
Oh, wow.
What do you think your portfolio would look like today?
I mean, it's pretty amazing to think about
Isn't it?
the impact of consistent long-term investing, even with relatively small amounts,
Yeah,
can be truly transformative.
absolutely.
Yeah.
This deep dive has been a fantastic exploration of the different ways to invest, even starting with just $100.
And it shows that there's no one-size-fits-all approach. The best strategy is the one that aligns with your goals, your risk tolerance, your financial situation.
You've given our listeners a lot to think about today.
I hope so.
Hopefully this episode has sparked some ideas and encouraged them to take those first steps toward investing.
And if you're inspired to start your own $100 investment challenge,
Yeah.
we'd love to hear about it. Share your experiences with us on social media using hashtag #SmartIncomeMasters.
And if you enjoyed this deep dive into the world of investing, hit that subscribe button for more Make Money Smarter insights from Smart Income Masters.
We release new episodes every week,
We do.
packed with actionable tips and strategies to help you take control of your finances and build a brighter future.
Until next time, keep learning, keep growing,
Yes,
and keep making money smarter.
we'll be right back.
Yeah,
Yeah, it really is amazing to think about all the possibilities.
absolutely. And you know what you've done here is incredibly valuable.
Thanks.
You've taken this abstract idea of investing and made it real, relatable, and frankly, exciting.
I appreciate that.
Yeah.
When I started this experiment 4 years ago, I had no idea what to expect.
Right. But you've demonstrated that anyone can do this.
Yeah.
You don't need a ton of money or a finance degree to get started.
That's right.
$100, a little bit of research, and a willingness to learn.
That's all it takes.
That's all it takes, and I think that's a powerful message for our listeners.
Yeah,
No matter where you are in your financial journey, there are opportunities to grow your wealth.
absolutely.
We've seen firsthand that different investment approaches yield different results.
Right.
And honestly, there will always be an element of chance involved.
That's true.
But by understanding those different approaches, assessing your own risk tolerance, and embracing diversification, you can make informed decisions and set yourself up for success.
And remember, the most important investment you can make is in yourself.
So true.
Keep learning, stay curious, and never stop exploring new ways to make your money work smarter.
If you enjoyed this deep dive and want to make money smarter with us, hit that subscribe button for more insights from Smart Income Masters.
Until next time.